Very good evening, viewers, and thanks so much for being with us here on India Today. You're watching the Business Today show with me, Chaiti Narula. Let's begin this broadcast with the top stories first. The Adani Group stocks witnessed a whopping $136 billion wipeout in market cap ever since the Hindenburg report came out, which has now entered the fourth week. The conglomerate's market value, including all 10 companies, has now plunged below $100 billion. Caution ahead of the U.S. Fed minutes continue to maneuver sentiment on Dalal Street. Benchmarks closed the day flat amid fears of higher for longer interest rate regime, while investors also closely watch Putin's address following Joe Biden's surprise visit to Ukraine. Gold loses sheen, with prices hitting 5-week lows after 17% surge since Jan 2022. This, of course, on the back of a dollar rally and an expected rate hike from U.S. Fed. But does this pricing action account for a buying opportunity? Stay tuned to Business Today over the next 30 minutes for our detailed coverage on returns. World's biggest cryptocurrency, Bitcoin, crosses $25,000 mark, surpassing Visa for the third time. India and Singapore extend cross-border linkages, integrating both sides' respective fast payment systems, namely UPI and PayNow. The move expected to benefit the Indian diaspora while facilitating faster transactions between both the countries. The wealth erosion in Adani Group stocks continues. The Adani empire's market capitalization has fallen below the $100 billion mark, making it even lesser than the top three biggies like RIL, TCS and HDFC Bank. Data, of course, shows from the day Hindenburg's report hit the street, Adani Enterprises lost nearly 2.08 lakh crore rupees, followed by Adani Transmission that lost nearly 2.14 lakh crore rupees during the same period. My colleague Sakshi is going to be joining us with more details on this. Sakshi, take it away. What do you sense? Which way the tide is going as far as Adani Enterprises is concerned, and any kind of caution coming in for the investors going forward from market experts too?
Absolutely, Chaiti, you're right over there. But the combined market value of Adani Group has definitely slipped below that $100 billion mark for the very first time since January 24th, when the US-based Hindenburg Research published that report, which alleged accounting fraud and stock manipulation, accusations that Adani Group has denied repeatedly. Now, the total market cap of the 10 listed stocks is now at $97.44 billion. Now, in rupee terms, the group has enjoyed a market cap of 90.2 lakh crore rupees as on January 24th, which is now slipped to 8.07 lakh crore rupees, and this is less than the market cap of the top three listed players on the stock markets, that's RIL, TCS and HDFC Bank in that order. Now, the Ports to Power Group has also lost about $135 billion in market capitalization in just 21 trading sessions. The maximum wealth erosion of the group stocks has actually been seen in Adani Total Gas, which has seen a market cap loss of 77% in this entire period, followed by Adani Green and Adani Transmission, both of which have also lost over 70% of the market cap in the same period that we're talking about. While the flagship firm Adani Enterprises has lost 54% of value, or 2.1 lakh crore rupees that we have seen as a loss in this period. Now, in all, the group has seen a market cap erosion of 57%, more than half in these 21 sessions. Now, this is despite the fact that Adani Group is now prioritizing financial health over aggressive debt-fueled expansion spree of the recent years. The group's focus has now shifted to cash conservation, debt repayment and recovering of the pledged shares as well. Now, the question is, when will the bloodbath really stop for Adani stocks, as investors have been losing money with every passing day and are now sitting at a colossal loss of 11 lakh crore rupees? Well, time will only tell, but the management really needs to come up with some strategy to ease the pain and calm the nerves of the investors now.
Very well said, Sakshi. Thanks so much for joining us with those details right there. And now, keeping with the Adani saga, here are the latest developments. The Adani Ports and Special Economic Zone is planning to prepay 10 billion rupees in commercial papers that will mature in the month of March. A company spokesperson in a statement said, and I quote, "This part prepayment is from the existing cash balance and funds generated from the business operations," unquote. Meanwhile, NSE tweaked the constituents of its major indices with Adani Group companies. Adani Wilmar and Adani Power are all set to make their way into some of the Nifty indices. And one of India's biggest state-backed lenders is willing to consider lending additional money to the beleaguered Adani Group. Bank of Baroda will extend loans to the conglomerate if it meets the lender's underwriting standards, said Sanjeev Chadha, who's the Chief Executive Officer and Managing Director, adding that he's not concerned about the market volatility but willing to keep lending to Adani Group. All right, Nifty and Sensex remain lackluster ahead of US PMI data and Fed minutes, which are due tomorrow. Nifty ended flat, you can see on your screens, with a loss of minor 18 points at 17,827 levels. Sensex shut above the 16,600 levels. Broader market was also down in today's trading session. Meanwhile, FIIs, which had turned net buyers last week after a long time, again became net sellers, denting market sentiment. Moving on to the Nifty gainers now on your screens right there. NTPC, the highest gainer, up 3.25%, and the lowest gainer, of course, is almost 1%, which is Power Grid. So NTPC leading the pack with over 3% surge. Britannia, Reliance, Tata Steel, Power Grid as well for the top gainers. On the other side, you saw Adani Enterprises plunging over 3%, followed by Apollo Hospitals, Coal India, Bajaj Auto, Tata Motors, all on your screens right there. Gold prices have surged more than 17% since Jan 2022, while the equity market stood almost flat during the same period. A couple of factors, including Russia-Ukraine war, sustained outflows by foreign institutional investors or FIIs, and an increase in interest rates weighed the market sentiment on the Lal Street. At the same time, fixed deposits hogged the limelight with rising interest rates. What is the outlook this year? Should you place your money in gold or in the safety of a fixed deposit, or take a chance with the stock markets? We're now joined by personal finance expert Jitendra Solanki to answer some of your questions. Welcome to the show, Mr. Solanki. Which of the three, gold, FD, stock, which one should I invest in?
So ideally, it is always difficult to decide which of these three would perform, because we are talking about the future. But if I go by allocation, still I'll hold 50% in equity and rest 50% divided between gold and fixed deposit. So that's the way I'll look at it, rather than I'll look at alternatives, which one to invest into. Yes, gold looks promising, but there might be certain opportunities to invest. Still rising fixed deposit. We are in an interest rate rising scenario, so it looks very attractive. And equity markets will remain volatile, but still I'll go by that ratio, rather than investing everything into either fixed deposit, gold or equity markets.
Mr. Solanki, many people have invested many years ago when the interest rates were very low. Should they get rid of that and reinvest that with the higher interest rates if they're looking at the fixed deposit route?
Well, if depends if the margin has been really high, so I think it might be an opportunity now to invest into a high interest rate deposit. So if your fixed deposit is giving you 7.5 to 8% now, and you have invested into 5% or so, so probably this 2% is good enough to take that strategy.
Very interesting. And interest rates are still on the rise. Should savers wait for them to rise more and be greedy, or should the deposits just be booked at the current rates? What's your sense?
No, you cannot predict, that the whole year interest rate will keep on rising or when did it stop. I think it's time to, lock your deposit at the current rate, which are really good, which are being offered now.
What about SIPs, mutual funds, or maybe directly equities? Where do you stand?
So SIPs continue. I do not think there is a reason to stop your SIPs and move the money to debt fund. Your SIPs should continue. SIPs are generally investing for a longer term. They should continue. There is no stopping of SIP even if markets remain volatile.
Yeah. All right, and how do you see gold performing now? It had touched highs this year, but it's been falling since. So is there enough upside to invest in gold? Is this the right period to get in and put the money in gold?
See, gold has given a lot of upside in 2022, and we have seen a lot of erratic behavior also from gold. And the investors have been happy that gold has given return. But if you look at this year, you might see some volatility. Gold might still go up, but you might see, gold coming down in certain portions. So maybe if I look at whether I should invest in gold now or later, I'll still hold my money and will wait for the opportunity this year to invest in gold.
For a middle class investor, if I had to spread my portfolio between equity and debt, what would the spread look like in terms of percentage division?
Ideally, if you look at 60-40 has always been a good percentage.
60 for equity?
60 for equity and 40 to debt. But this year, if I look at, so maybe 50-50 would be a good, bifurcation of your investments.
All right, Mr. Solanki, I'm sure this helps our viewers quite a bit. So you know from Mr. Solanki now where to put your money, where to park it, and how to park it more importantly. Now from gold and fixed deposits, let's shift focus to crypto assets making headlines. Bitcoin has crossed $25 mark, dominating the global crypto market with 42% contribution and a market cap of a whopping $476 billion. Let's now understand the legs of this rally with my colleague Sakshi Batra. Sakshi, crypto has always been a rather complicated space for many to understand, because of the high levels of volatility as well. So take it away. What should one do when it comes to crypto?
Right, Bitcoin has crossed the $25,000 mark for the first time, and this is since June of 2022. From the November lows also, it is up by 60-odd%. The global picture also looks quite positive, with the crypto market rising 2% in the last 24 hours alone. We've also seen that the crypto market cap entirely has also risen above the $1 trillion mark at $1.13 trillion. Now, important reasons why we are seeing this crypto rally. First of all, it is the worst of monetary tightening maybe over. That's the sense that we are getting. Most of the analysts also believe that the larger impact of the regulatory actions also look quite factored into the crypto move. Couple that with the lack of major macro catalysts and the fall in the equity volumes amid the range-bound trade that we've been witnessing in stock markets, and also interest coming back in cryptos somehow. All of these reasons are leading to the rally. If we look at the major cryptos, for example, Bitcoin, Ethereum, Binance, all these major currencies are up anywhere between 8 to 15% in the last 7 days. The bigger question is that whether there are enough triggers which can push this rally further. Now remember that Bank of Russia is expected to start testing the digital ruble anytime soon. Hong Kong has proposed rules for crypto trading platforms as well. That's a bit of a positive. Then San Francisco's Federal Bank is also eyeing rolling out of the central bank digital currency system as well. So that's going to be an important factor too. So those are the important triggers which could actually fuel further momentum in the crypto space going forward from here.
IT bellwether Wipro has slashed previously offered pay packages by half, urging freshers to join at 3.5 lakh rupees per annum versus an earlier 6.5 lakh rupees per annum. The move comes amidst mounting recessionary concerns, margin pressures and rising macro uncertainty. My colleague Akanksha Chaturvedi now joins us with more on this. Akanksha, what are the terms of this new revised agreement and what do stakeholders think about this?
Like we've been reporting for months now, thousands of freshers have been waiting to get a joining date at some of India's leading IT and tech companies, and Wipro is one of them. What Wipro has done now is that it had previously, last year, in the beginning of last year, offered jobs to many people, and their CTC, cost to company, was around 3.5 lakh rupees. What Wipro did was it gave them the option to go through a training called Velocity, after which their salary would be bumped to 6.5 lakh rupees per year. And this is what thousands of these freshers did, of course, because they wanted a better pay. Now, what Wipro did is that they made all these freshers wait for over 12 months now. Wipro did not give them a joining date. And as Business Today has just learned, is the fact that Wipro is now giving these people a new option that they could join the company but at a lower pay. That is, people who were first promised a pay of 6.5 lakh rupees will now have the option to join the company at 3.5 lakh rupees. Employee unions as well as students and freshers who were given these job offers are infuriated by this and are calling this move unethical.
All right.
Employee unions are also mulling to go to the ministry, to the Labour Ministry, and talk this through. So that's all the updates we have so far. Back to you.
All right, leave it at that, Akanksha. Thanks for joining us. Now, transferring funds to and from Singapore is now lightning fast and cheaper as well. Prime Ministers of the two countries oversaw the linking of India's UPI with Singapore's digital payment system PayNow this morning. And for those going to Singapore, you can now make payments there via UPI as well. And that's the good news. Take a look.
tiny city-state is one of the most popular destinations for Indian tourists. It's also one of the top destinations for Indian immigrants. And universities in Singapore attract more than 3,000 students every year.
The launch of UPI, RuPay and Bheem enabled remittance app by Prime Minister Modi in Singapore in
Three big reasons why this linkage between India's UPI and Singapore's Pay Now is a big business booster between the two nations.
So we will wait for them to get the sent notifications or successfully sent notifications. And when that's done, yes, big smiles from MD. Have a big round of applause. And Governor Das too.
The linkage was attended virtually by Prime Minister Narendra Modi and his Singapore counterpart Lee Hsien Loong. The transfer of funds between the MD of the Monetary Authority of Singapore and the Governor of the Reserve Bank of India threw open the gates to the first international person-to-person transfers under UPI.
रियल टाइम डिजिटल ट्रांजैक्शन के मामले में भारत विश्व के अग्रणी देशों में है। आज यूपीआई भारत में सबसे पसंदीदा पेमेंट मैकेनिज्म बन गया है। मर्चेंट्स और कंज्यूमर्स दोनों ने ही इसे ज्यादा से ज्यादा वे अपना रहे हैं। इसलिए आज बहुत से एक्सपर्ट्स ये अनुमान लगा रहे हैं कि जल्द ही भारत में डिजिटल वॉलेट ट्रांजैक्शन नकद लेन-देन से अधिक हो जाएंगे।
Customers with Paytm, Google Pay, PhonePe and other payment platforms will now be able to transfer funds to any phone number linked to a bank account in Singapore. For those sending money from Singapore, recipients in India will need to have a VPA or a virtual payments address. What the new service offers is instant transfers, simplified transfers without much hassle, and transfers at a lower cost. According to reports, the UPI transactions will cost 10% less than the current interbank transfers. There are around 6.5 lakh Indians in Singapore, making the tiny country the fourth largest inward remittances to India. Last year, of the $100 billion remitted to India, a little over $5 billion were from Singapore. India currently has agreements with 13 countries which want to adopt UPI for digital payments. These include Singapore, Malaysia, Bhutan, Nepal, UAE, Oman, Saudi Arabia, Switzerland, Luxembourg, Netherlands, Belgium, France and the UK. With India taking on a larger global leadership role as the president of G20 this year, India's digital payment platform is expected to find more markets. The RBI took a major step in this direction on the 8th of February when it allowed foreign arrivals from G20 countries to use UPI in India. Bureau Report, Business Today Television.
India and China will be growth drivers for the world this year. According to the International Monetary Fund, or the IMF, the two countries will contribute more than half of the global growth this year. Even as the West faces economic uncertainties, it is the Asia-Pacific region which will provide some stability. Take a look.
Asia is all set to rule this decade, with the International Monetary Fund placing its bets on India and China to steer global growth through rough weather this year. The Global Financial Institution says that the two neighbors are expected to contribute more than 50% of global growth in 2023. According to the IMF, apart from India and China, other Asian economies will contribute 25% to global growth this year, with the other world economies contributing 25% too. While the rest of the world faces economic uncertainties, improvements in supply chains and the service sector will push Asia-Pacific region's growth to 4.7% this year from 3.8% in 2022. IMF has also warned Asian economies that despite the threat of inflation diminishing, central banks needed to stay alert as the core inflation was still high and that the reopening of China's economy may push inflation up. Meanwhile, the Russian invasion of Ukraine and the ongoing increase in interest rates by central banks worldwide have had a significant negative impact on both the developed and developing economies of the world. The impact is more moderate on China and India. China has recently ended its COVID-0 policy, and its reopening in the second half of the year has boosted the global supply chain in trade. For 2024, the IMF has forecast a GDP growth of 6.8% for India, which is the joint second highest along with Vietnam among all Asian emerging economies. Mongolia tops the list in this category with an estimated growth of 7% in 2024. It's not just the IMF which is positive on the two Asian giants. Last year, a study from the National Bureau of Economic Research said both India and China will likely become the world's leading economies in the coming decades. Bureau Report, Business Today Television.
All right, that's it from me, Chaiti Narula, on this edition of the Business Today show. Keep watching India Today. Have a very good night and thank you for tuning in.